The Reserve Bank kept interest rates on hold today, but there are growing calls for an urgent look at the amount of household debt Australians are taking on. There's consternation about the widening gap between the record low 2% cash rate and the whopping interest rates banks are charging on credit cards at 20% and more. Adam Harvey reports.
I got my first credit card in 2007.
Tita Tippapart is a bank's dream customer.
I used to use my credit card on a regular basis, going out with friends and paying for dinner. It took me a few years to get into debt. It was accumulative. It wasn't, I didn't spend a lot of money at the beginning and then get into debt. It was kind of ongoing, and it was, defaulting on payments and forgetting to pay it off.
The 20% interest rates became crippling. To repay her credit card, Tita took out a personal loan.
I pay off my credit card debt by putting aside somewhere between 25 to 30% of my paycheck every month, so it can range from $700 to $1,000 a month just to pay it off.
So, congratulations,
The Reserve Bank's official rate is at a record low, and banks have mostly passed it on to mortgage holders. But credit card rates remain stubbornly high.
What you have is a lack of competition in the credit card market, and you've got a gorging going on by a handful of big institutions and big banks who frankly have not been in a competitive enough environment to actually put downward pressure on rates. Let's be clear, this cannot be allowed to continue. Something has to be done and action needs to be taken.
Credit card debt is a hugely profitable part of a bank's business. We don't know exactly how profitable, because that's a secret. But for consumers, it's easy to get into and hard to escape.
It has been difficult to get on top of it. I think, a lot of the time I look at my balance and I'm paying off interest more than I am paying off a debt. So it's definitely been difficult, and even though I've been putting aside money to it, I don't feel like I've made a dent in anything.
The macro group or two.
A Senate committee is this week scrutinising the high credit card interest rates.
That the gap between the cash rate and the credit card interest rate has now reached a record high. Look, the real worry is that what we've got in credit cards at the moment is cartel-style behaviour. That's the real concern, and that's what we have to get to the bottom of, is that, when you have record amounts of money being made, record amounts of interest being charged, credit card interest rates, you have to ask yourself, what's wrong with a market that hasn't created enough competition?
The banks say that's just not true.
It seems that the debate's being couched as if there's only one credit card out there, but the point is that there is a range of cards with a range of interest rates, and you can get a sub 10% interest rate on credit cards. The other point about credit cards is that about 95% of credit cards have an interest-free period. Now what that means is you can choose to pay no interest at all. If you pay the balance off in full before the due date, you pay no interest at all.
That's great when it works.
Yes, we have a credit card, and I try to put all my purchases on it for our offset account.
So it's linked to your mortgage account, is it?
Yeah, it is. If we take more money out of the mortgage, then we get a high interest rate. So we try to pay it off on the credit card, but we have to be so vigilant to pay off the credit card at the right time, otherwise it's incredibly expensive.
Does it ever slip?
Yes. My husband has forgotten to pay it a couple of times, and I was furious because it was hugely expensive. And so now we try to put it in the calendar, but it does cause a bit of stress trying to remember.
Welcome to Come Back In. Highest bidder wins today.
The surging property market in Australia's two biggest cities has helped push average household debt to its highest level in almost 30 years. Peter Esho says the banks are making plenty of easy money from mortgages, and they don't need to drop credit card rates to chase customers.
Sitting quickly. So congratulations, guys. Well bought.
For every dollar that a bank lends in the credit card market, it can also lend to businesses or in the residential space. And the residential space, because property prices have been going up by so much, it's such an attractive business for the banks to redirect funds. And so they haven't been as aggressive on the credit card side of things, on the personal credit. They'd rather redirect into parts of the market where there are wider profits, greater absolute profits, and less risk of defaults.
Risky credit card customers are stuck with high interest rates.
Once you fall behind in one or two payments, once you don't have a perfect credit history and a perfect credit rating, being able to access those kinds of products vanishes. And what we have now is credit cards becoming the new form of payday lending. You have people going credit card to credit card, payment to payment, and all they're doing is paying an exorbitant rate of interest and never being able to fight the principal.
I think as a young person, I wish I'd never taken out a credit card, and I wish I wasn't in debt to the extent that I am now. I mean, it's not a huge amount, but it's worrying that sits over my head. So, as a young person, I think it's terrifying to know that, you can't save anything because all of your money is going towards paying off this debt.